so I can think. They energy firm. Actually, who was it? Pioneer PXD has an investment in them. I think they were spun off from PXD. Is that what it was? Something like that. But it was a very not that leveraged, leverage of energy player, deceivingly leveraged because I think it had leverage, but it had the cash balance that would like cover it, so it wasn't that leveraged. So it didn't make sense to me that it was. Anyway, it looked attractive right here, but I never bought it because it was too expensive. I thought it may be worth 15, $20, and then it sold off here, and then it sold off here, and I'm like, oh, now it's starting to look good. And I definitely started to buy here. I'm like, all right, I bought some here, and then this happened, and I legit bought sub two. I bought well below here. Like I almost timed it. I got lucky because I was watching it, and I bought it, and then it came up that day. It looked like the market had messed up. The market very clearly messed up because the stock is undeniably worth much more than $1.50. But everyone's freaking out, and but that was the same day gold collapsed, and a lot of names like that morning things like fell apart. And pump was one of them where this was the market messed up, and in my opinion, because the stocks are like almost objectively certainly worth way more than that and not going bankrupt or anything like that. I didn't think they were battling liquidity issues with their cash position and stuff, and so it's the super cheap, and then it continued to fall down. I bought some more, and now it's a big chunk of the portfolio. Partly because it's already doubled. I bought most of it right here, I should say. Maybe I've added. And now I think it's worth 10 15. So does Wilkes. When Wilkes bought April 3rd. Or he filed it April 3rd, right? All right, it's 10% position. He may have been buying. Maybe he bought it. Maybe he owned some before then too. I'm not so sure. But Wilkes, they are people. This is a thing. They're energy folks. It doesn't mean that they're right, but if they're taking that large of a stake in a company, they're making a move. They're like, all right, there's something off here, and that validated my belief that it's way overdone. I actually still think it looks cheap right now. This is why it's still a big chunk of the portfolio, because unlike Camping World, which I think is getting, I don't want to say overvalued, and even if it's fairly valued, I'm still okay holding some. It's not really concerning to me. That trend, like I said, fundamentals look good, technicals look good. I'll keep holding. I don't mind. And if it works out against me, that's okay. Learning opportunity. But in the case of Pump, I actually think if energy is turning around, I mean, I still have this heavy energy exposure. I expect Pump to be a winner on that front if this is happening. And I also think the downside is limited. I think this was a mess up right here. And yeah, if everything sells off, it will too. But I still like it. So, so he just under 10%. No, he didn't file since. So that would. Oh, did they ever file a new 10Q? Oh, they did. Oh, that was waiting on that. So this is the other thing. This is a big reason it sold off. They didn't have updated financial statements, and that scares people off. It scares institutions off. There were some issues, and nothing I felt was too concerning as to why they needed to. There was the former founder or manager, CEO or whatever, did some weird stuff, and they had to investigate, and they didn't have updated financial statements. So it's a silly risk. I think for someone like me, I think I'd love to see something like that. I'm like, oh great, so they haven't filed their updated financial statements. People freaking out about it, or when everything's selling off, they don't want that on their books. They go, get rid of that. We don't even know what their books look like, but they were saying in their press releases they were given a handful of data points and be like, our cash position is $600 million. Our total debt is $400 million. Like the few data points they were giving you could piece together like, what? Excuse me. You have enough cash to cover your debt? Okay. Oh, so you have enough cash to cover your debt, and you have fairly higher quality assets and a history of profitability and trading below book value. Can I pull it up real quick? I didn't just type it somewhere, did I? Oh, I might have. Let me do this. And so when those few data points, I'm like, all right, so you piece the narrative is very simple. If you can piece together, it's all about piecing together. What's the narrative? Why is this thing selling off? And is there something that may have screwed the market up? And in this case, energy was selling off, and the market was selling off. It's a smaller company. Like you can summarize. This is what I was trying to do in that GameStop video, and I want to do it with additional videos. But you can summarize the thesis in like 5 bullet points. This is why it sold off, and this is why it could turn around. Like the thesis for Pump was so simple, and it's still so simple. Look at it. It was trading $1.50 with $9 per share in book value, pretty decent book value, I felt, and no outstanding net common overhang. It was like, what? It made $2 billion in revenues, an EPS of $1 trailing 12 months through March 31st. But people were concerned because they didn't have those updated financial statements. It's just one more thing. So anyway, I'm going off on a tangent there. But now as I'm rechecking a Pump, I haven't looked in a while, but it's a big position. I should be more up to date with it. Market cap is 600. Like, I understood why it sold off, and I thought, oh, this is great. Pump is my type of stock. Those are the types of risks I like to see. And I remember thinking at the time, it dropped down to $1.50. I think $1.50 was the low. Oh, wow. It did. It briefly took that. I remember being like, I thought I caught the low. I thought I caught the true low this day, March 16th. And I thought that was it. And then it came down, and then it went down again this day. I thought, I missed it because it took out the 150. And, but then it bounced right back. But I thought this is going to be a 10 bagger. I thought this is going to be a 10 bagger too that day, that it's going to rise to 15. Let's see if it does. I thought it was worth 10.15. And if energy comes back in a big way, like if you see the dollar heading south and gold's getting bid up and even oil was up today, if that happens, I mean, Pump could be it could reach previous high. I mean, it was at $24 in April of last year. I say it's worth 10.15. I try to be super conservative with my valuations. Upside will take care of itself, and so it could be a 20 bagger. It could be a 15 bagger. So that's what I mean. Like, that was a great opportunity, and now I'm like, should I own more of it? I'd love to buy more on a pullback, maybe. Wilkes didn't sell, but this, I mean, it's been pretty stable. You know what I mean? I haven't been given much of an opportunity, and I kind of like where their position is right now. And I have so much energy exposure; it's hard to justify buying more. But that's the type of stuff I think about.